Good morning, traders and investors. It's finally Friday. Yes, it's Friday, July 21st. This is Roger Scott, Senior Strategist for Wealth Press. It's about 7:54 in the morning. Market's going to gear up to open up in an hour and 36 minutes to be exact. Now, here's what I want you to do. I want you to like this YouTube Wealth Press channel. Go to YouTube and then type in Wealth Press. You can find these videos there. I post them personally myself. I'll do it right after I'm done with it right now. I post them around 8:30, and also subscribe to our Telegram channel. That's rogerscott.com/Telegram, or find the link below or above this video. Most importantly, I've opened up my VIP room for the summer for the public. It's happening at 11 a.m. Eastern time today. You can also find that link in the YouTube Wealth Press channel or above or below this video, depending on where you're watching it. Now, let's get into all of this. What are we wasting our time for? I can't believe it's Friday already. So as you can see here, the Nasdaq's up about 67 points. The Dow is down. Now, I want to explain to you something and show you something that's been going on. Now, this is the Nasdaq yesterday. This is after earnings on Netflix, and Tesla failed to give Wall Street what they were looking for, and this is a pullback. Now, I want to show you something with technology, communication, and consumer discretionary. They're all falling off right now. And the big question is going to be whether this is a pullback. Look at that, all the way to the 20-day line. The big question is going to be, this is a pullback and it's going to give us a bounce, or we're going to come back. Now, the problem is, if you looked yesterday, this is yesterday's trading action. We closed near the bottom on communication. I keep confusing these. Discretionary, communication, look, all the way down, and technology. They're all doing the same thing. That's why I'm confusing them. This is yesterday's trading action. It opened down and it went down all the way. Typically, when you open towards the bottom, you have a nice bounce like we're seeing right now in the futures, and then the market continues trading lower. Now, we could have a bounce that continues to the upside, especially if the earnings are good, and we do have a lot of earnings, but you will find that we don't really have any, if any. I mean, we honestly, this is what, today's Friday? Let's look at Friday. You've got American Express, AutoNation, Roper. You don't have any major tech catalysts. So if there's no major catalyst to cause these stocks to go higher, if the buyers didn't come in yesterday, as you could see here, technology, nothing came in. Here's technology, nothing came in. Communication services, nothing came in. And I mean, look, nothing came in. And discretionary, nothing came in. Most importantly, I didn't forget about you. Now, again, because this is using the 6-month, 3-month, and 1-month, technology, communication services, and consumer discretionary are still up there. Because look at the 6-month, 41%, 38%, 31%. But look at the last 30 days, 0.91, 1.41, 2.59. When we organize these in order of relative strength of the last 30 days, let me show you where these have been. Technology is almost at the last place. Consumer discretionary, it's already halfway down. Communication services down here. If this continues, we're going to see little by little the blue chips take control over the technologies and the communication and the discretionary. When I say technology, just assume I'm talking about the 3 sectors. They all come in a package. It's a package deal. Consumer discretionary, technology, and communication. They all are together, very intricately tied together. So as you can see here, for the last month, financial, industrial, energy have been outperforming. And I think consumer staples is going to start coming up at the expense of these stocks. So if this continues, if what we're seeing is going to continue, it's not going to be pretty. And again, we do have a lot of earnings, especially American Express, which is actually looking, let's see how it's looking pre-open. XP, it's looking down. So American Express is not looking great, and there's no catalyst for these stocks today. As I mentioned, look, you've got no major large cap tech. So I would be very, very careful, especially if these stocks are up for today. Like, let's take a look at Netflix. It was down all day yesterday. It's up. It lost 8% yesterday. Now it's down 0.13%. No. Tesla, let's look at Tesla. Maybe Tesla's bouncing. It lost yesterday almost 10%. It's up a little over 1%. Not believing it. So I would look at today's trading action as a continuation, especially if we break the lows on these stocks. And the lows on the communication, I keep confusing them, on the technology sector is 175.50. On the XLC, the low is 66. And on XLY, the low is 170.70. Now, again, we're reaching the 20-day line, which means we may bounce, and we may bounce hard. But again, I would be very careful because there's no catalyst for upside, and there's no Fed data. There's no Fed data on the table right now. Let's talk a little bit about global economy. And I'll also, before I leave, make sure you stay till the end. If you wait till the end, I'm going to give you 3 stocks that are prime for day trading candidates today. Yes, today, and they have no correlation to the rest of this market. I'll go through them at the end of the session. So let's go through and give you a little summary of what to expect. So market participants digested a mixed slate of corporate earnings and parsed through economic data that underscored the continued strength of the labor market, which means the Fed is not going to change their approach, with focus shifting to the Federal Reserve interest rate decision scheduled for next week. Wow, next week already. Well, I wouldn't agree with that. I'd say it's still very much focused on earnings and the Fed announcement. Labor Department, the Fed employment report was fine. It was within the 250,000. Manufacturing came a little slow. U.S. existing home sales fell to a 5-month low. Keep an eye on those home builders. They might start to sag. Things are looking a lot more bearish than they did 2 weeks ago, I'll tell you that. The existing home sales were down, and there's now a 99.8 probability. Yes, the Fed is going to raise rates next week. There's no question about it. Now, here's where things get interesting. So we were expecting earnings to fall 5.7% at the start of this month. The month is only, we're only 21 days, 3 weeks into the month. Now it's 7.9%. So things are not getting better. They're getting worse. So I'm going to repeat that. Things are not getting better, and Fed is still raising rates. And if they keep doing this, that shift may come down, and the market may start getting into a nasty bearish bias. We have losers in technology stock leading the overall market lower in U.S. and in Europe. They're keying off of us right now. China closed slightly lower as new measures to aim to help auto and electronic sectors fail to boost investor sentiment. They're taking it in the chin right now. They're not doing so well. And again, we've got earnings on American Express, Schlumberger, Roper, Regional Financial. Not a lot of tech, consumer discretionary, or communication stocks, more blue chip stocks. Now, I want you to see this. This is a Dow, and it has a bearish candle. I think we're really getting to a point where we're overdone, and this has been algo buying. Algo. Now, algos have moved away from the top 7 or 8 of the largest cap stocks. They've moved into the broader market. The broader market is being pushed by algos, which means some of the smaller stocks are in play. If you look at the equal-weighted S&P 500, it looks like it's stalling out right here. And for the most part, this is algo triggering. I'm showing you the equal-weighted one because the equal-weighted one doesn't have those 7 or 8 stocks controlling the market cap. So this is where the magic is right now. And that's what the algos have been doing. I think we're going to see an undoing of this. And as you could see in the Dow, I think we're going to see an undoing of this as well because it's just too much too fast. And there's absolutely no reason for us to be above this area right now. If you look at smaller stocks, if you look at the ARC, you will see that she already started moving lower quite a bit. Those tech stocks, those degenerate tech stocks, they're not going to, and this looks like a topping island reversal candle that similar like this. So I would be very, very careful. We're almost at the top. And let's look at the Russell 2000. Let's see if the same thing happened to the smaller stocks. They didn't do so bad, but again, it looks like we're topping out around this area. Folks, the sentiment is becoming more and more bearish. The technology earnings are not what we thought they were going to be. We've got more earnings, and American Express is already down quite a bit. Bank stocks are not going to do amazing, and I would be very careful. Keep your eye on the lows and see whether we break the lows. Now, I want to give you some day trading stocks for today. I know a lot of you guys are into day trading. These are morning day trading sessions, so that they happen between 9 and 10 o'clock. So the first one is DWAC. This is Digital World Corporation. The stock is already up 20%. It's trading at about $16, so it's already above this level right here. Let me give you a 3-month chart. So it's already trading at 16.30, and if it breaks higher, there could be some liquidity. The volume is already really high on it. Next one is BGLC. The stock is already trading up 54% this morning. 54%. 54%, if you can believe that. It's now trading at, and it was already a runner, it already went up to 18, so there's a good chance it can go higher. And it's already at 760 right here today. So it looks like it's going to try to run again. And to the downside, Sirius Radio, that Howard Stern, I guess he's not making as much money. This looks like it could be an implosion to the downside. The stock looks like it went up as high as it's going to go. It gained from $4 to $8, and now it's down 8% already. I think the good times are behind us for Sirius, and look at where it is, previous resistance level. So maybe selling Sirius and buying DWAC on a breakout for a little morning delight, and BGLC, a little stock that's also up 50%. These are pre-morning plays. Now, before I let you go, I want to remind you, please visit my VIP room. It's happening at 11 a.m. today, Eastern Time. Like and subscribe and comment on the channel in the videos there. And most importantly, I got something important for you. If you missed my big reveal this week, well, you're in luck. Yes, you're in luck. Because I'm going to live at 1 p.m. Eastern on Saturday, tomorrow, with my good friend and former market maker, Jack Carter. He's awesome. He was blown away when I showed him my research into what could be the biggest trading opportunity in 2023. The data dating back 7 decades shows that every single time we've come out of this recession, 9 out of 9 times, something explosive happens with about 150, 147 something lesser known stocks. And with the S&P up 20%, yes, up 20% off the bear market lows, now is the time again. That's right. Click the link below. Join me Saturday afternoon. I'll be done swimming in the pool with Rachel, and I may even give a free stock and an option play if things go according to plan in this market today. We'll see, but there's chances are on your side. Follow the link below. Make sure to join me in my VIP room. Tomorrow, Saturday, don't miss out. Me and Uncle Jack are going to tackle the market at 1 p.m. Eastern Time. You don't want to miss out, and I'll give you a free red meat trade for Monday. How about that? An option. Bye, guys. Have a great weekend. If you have any questions, comment below this video. You'll see I respond to every one of them.